No, that's 100% right. A bit of an unusual day. We started down almost 1%, and then the market seemed to find some strength mid-morning and then rallied strongly and then closed slightly down at the end of the day in the session. So quite an unusual day, but probably not surprising given the the run that it had yesterday, especially in resources, where, as you say, with the gold price and commodity prices and the rand strength.
And of course, we saw the Dow Jones opening higher this evening, up about 1/3% so far. And that was in the back of a couple of bits of news. We have GE, General Electric, being upgraded by Goldman Sachs, and then some new diet drug helping to spur on the pharmaceutical counters on the Dow. So could perhaps point to a better day tomorrow.
It could, hopefully, and let's wait to see how the Dow finishes. But as you're right, the Dow futures were up when the Dow opened, well, just before it opened. So yeah, all indications are that we're going to have a positive Dow tonight.
And of course, we have the gold price back above $1,000 an ounce this evening, but of course we have the rand going down to 7.46 against the dollar. So it's really a mixed blessing for the gold producers at this stage, because they're not going to get any benefits from this higher gold price if the rand continues to hold so strong.
You're 100% right. They're caught between a rock and a hard place. 100% right. Their revenue is dollar-based, but it also needs to be repatriated into or converted into rands. But also with the miners, you're seeing production volumes coming down quite a bit. So the gold miners are in a tough place at the moment. As you say, the gold price and the rand not helping, but also their production volumes are a lot weaker.
Of course, we saw other resources counters also down today. In fact, we have the index down about 1%. Do you think that's also largely due to the strong rand, or is there something else there?
I think today you saw a bit of profit taking given the way the market has run since the beginning of the month. Resources have been up quite nicely, and I think it's just a case of a bit of profit taking coming through. We haven't had any major earning numbers coming out as of yet to sort of give any sort of further analysis to the trend or the earning visibility for the sector going forward. So I think it's just a bit of profit taking at the moment.
Well, we did have some results out today. Probably the most notable one was the Aveng results. Revenue up 14% to 33.8 billion, but operating profit down 13%, headline earnings down 10%. No big surprises, because they had flagged this in their trading update previously, hadn't they? No,
that's right. And if you read the results and you look through, they had good results coming out of their construction and engineering side of their business and the open cost mining, and unfortunately their manufacturing and their steel business dragged their earnings down. So on one hand, positive, you had declining earnings, but they maintained their dividend. But you could probably argue that maybe there's that excess cash that they could have increased the dividend going forward. But I do understand to a certain extent that you want to keep your balance sheet strong in this environment. But from shareholders, they could probably be a bit disappointed.
I see the share price was up quite nicely there, about 5% at the close. It's got a 2-year order book, which has increased to 30.4 billion rand. Is that looking pretty healthy to you?
It does look healthy, but you do have to throw in a question, in this environment, they're accelerating the order book at such a pace. What quality is that order book? And I guess only time will tell later on to see what the quality is in that order book.
We had results also from Metarex. What did you think of those?
Yeah, Metarex have had a really tough time. The results were slightly below our expectations, but within range. They came out with headline earnings in the region of about 24 cents. But as I said, they've had a tough time. They've had to have a rights issue. They've had to inject capital into their DRC mines. They've had production issues. They've had a very weak balance sheet with high gearing, which they're currently working on. So they're in a very tough space, and they need to sort that balance sheet out going forward. They need to improve the liquidity in that balance sheet. Okay, and just quickly, trading statement from Richemont this morning. Its shares are down 3.5%, not taken well by the market, as I presume. No, I think they're probably expecting slightly better news, but as Johan Rupert said, the environment has been tough. In the high luxury end where they operate, you would expect volumes to be down. But I think the main volumes were down in the wholesale side of their business, not necessarily in their retail. So it's pragmatic. You would expect them to struggle in this environment. But if you look through the cycle, it could be positive for Richemont going forward.